Welcome to the Rising Entrepreneurs Podcast, where we feature top founders and entrepreneurs and their journey. Now, let's get started with the show.
Dr. Jeremy Weisz here, founder of InspiredInsider.com, where I talk with inspirational entrepreneurs and leaders. Today is no different. I have Rick Gardiner. You can check him out at iaffiliatemanagement.com. Rick, before I formally introduce you, I always like to point out other episodes of the podcast people should check out. Now, Rick's going to go deep into relationships, strategic relationships, and affiliates, and how you can have someone else. In my opinion, Rick, it's a shortcut for brands, right? Because someone has an inborn audience. Their audience already knows, likes, and trusts them. So they're promoting a brand. Makes perfect sense. So I'm not sure why everyone doesn't do it. Maybe you'll explain why. But a couple of things, because we met through EO, there's some really interesting interviews of other EO members. Anthony Standifer, you check it out. He's the co-founder of MSeed Group. They're a contract manufacturer specializing in health and beauty and personal care, right? And so I'm like, Rick and Anthony should know each other. I'm sure there's ways to collaborate. Also, Noah Rosenfarb of Wealth Thrive, he talks about reducing taxes and building a predictable income and the inner workings of a high growth agency with Wes Matthews. And he grew a really large agency, sold it, and it was an interesting conversation. Check out that and more on InspiredInsider.com. This episode is brought to you by Rise25. Rise25, we help businesses connect to their dream relationships and partnerships. We do that by, one, we're an easy button for a company to launch and run a podcast. We do the strategy, accountability, and the full execution and production. And number two, we're an easy button for our company's gifting. So we make gifting, staying top of mind for clients, partners, prospects, even staff from a culture perspective, simple, easy, and affordable. You just give us the addresses. We do everything else. And it's not like a one-off gift, Rick. It's like, think 3 gifts a year for 4 to 5 years. Awesome. So we kind of call ourselves the magic elves that run in the background and make it stress-free for companies to build amazing relationships. You know, for me, the number one thing in my life is relationships. And I always look at ways on how I can give to those relationships. And I've found no better way over the past 17 years to profile the people I admire and share with the world what they're working on my podcast, and to send them sweet treats in the mail. So go to rise25.com or email support@rise25.com. I am really excited. Rick Gardiner is founder and CEO of iAffiliate Management. They're a leading affiliate marketing and partner marketing agency. And they help direct-to-consumer e-commerce brands scale revenue. They do that by cultivating best-in-class affiliate partnerships with some top content review sites, mass media publications, and other really high-value affiliate partners. Rick was a former Division I swimmer. Much respect there. I mean, you have to have super amount of discipline. I remember, Rick, I did not want to do swimming growing up, which was a mistake, because there was like people were waking up at like 4 a.m. to like get in a cold pool. That did not seem pleasurable at all to me. Now I swim 6 days a week, so I should have gotten into it sooner. But he's been in the affiliate, and partner marketing world for over 20 years. And he really helps marketing leaders and brands rethink how affiliate could fit into their marketing mix and add value. So Rick, thanks for joining me.
Thanks for having me, Jeremy.
So let's start off. I'm going to pull up your site here. Just talk about, for a second, iAffiliate Management and what you do.
Yeah, so our agency, we've been around for 16 plus years. Kind of started out in working primarily with digital goods, software SaaS, and have expanded into some other categories from apparel to food and beverage. But our core focus has always been affiliate marketing. I say it with love that we've been doing affiliate marketing before affiliate marketing is cool, but it's definitely evolved, and I think getting a bigger seat at the table. And I think the impact and outcomes that it can influence has also expanded. So, primarily working with D2C e-commerce brands. We also help brands drive and scale more revenue through their marketplace, Amazon, Walmart, marketplace stores, TikTok shop. But at the end of the day, it's really about building valuable, trusted, strategic brand partnerships and helping brands grow and scale.
We'll talk about how companies can use these partnerships. But it's interesting to me. How did you even get into this? Right? Because I know obviously you were a swimmer, you studied speech communication. And I'm not sure if you were growing up, I want to be an agency owner when I grow up or something like that. But how'd you get into this line of work?
Yeah. So I grew up in a very entrepreneurial family. So my dad started and exited a publicly traded company, and my mom
What
also
type of
was
company was it? What did it do?
it was you can think of it as like Amazon's recommendation technology. So they, started around the same time. Amazon had the whole ecosystem, but they were kind of a plugin that would cross-sell, make product recommendations to increase basket
If you
cart
got
size.
this, you'd also like this type of thing.
Other shoppers have also bought this, exactly. So that was kind of their core technology.
Smart.
But yeah, so just kind of always knew I wanted to be an entrepreneur, own my own business. Went through school, went the corporate America route, learned a ton, and kind of.
Did your dad give you any advice growing up? Like what was he telling you to do? Obviously, he was an entrepreneur. Was he like, go get a job at corporate? Maybe you should start your own right off the bat. What was his advice?
I think the advice has always been, given my personality and everything that goes with that, something in the realm of sales and marketing would always be good. Didn't really have kind of a path, but I think, regardless, learning how to sell and build relationships with people is really kind of a foundational pillar of building a business, regardless of what you're doing. So that's kind of growing up, and also as I was in my career in the corporate America side, it's always been on the sales and marketing side. Where I got introduced to affiliate marketing was when I was working with Digital River, which is an e-commerce platform or technology company that sadly just shuttered their doors last year. But I was brought on to help build out and grow their flagship affiliate network. So I got to kind of see behind the curtain, understand the publisher partnership side from the affiliates, working with them and understanding how their different business models worked, but also from the advertiser and merchant side, and also from a network and technology side. How do we track, report, attribute, and pay partners for the sales that they're driving? So it was really, really educational. It was probably a little bit intimidating. I knew nothing about affiliate marketing, and my wife, I would tell her, I took that job 30 days at a time. Like, I knew nothing about it, but I still have a job for 30 days. And 4 years later, 5 years later, was at the company, and really just grew to love the industry and kind of what it meant and how it was having a positive impact for a lot of people, both, from the big company and merchant side, but also at the time, a lot of just kind of bootstrapped entrepreneur affiliates that were, doing content. They had, email lists or other promotional methods that they were using to make a living. And I found that really inspirational. And, at one point decided I wanted to venture out on my own and start an agency. And here we are today.
And I'm sure you built a lot of relationships through that. I'm curious, at that time you cut your teeth at Digital River. What worked at that time that you found, and then what did not work at that time? Maybe that surprised you.
What worked? I think content has always been a big piece, and it's taken all shapes and forms. I think, looking at the top 10 review type sites out there and kind of getting products and brands included in those write-ups and roundups has always been a what brands are really interested in has always worked well. Organic SEO driven traffic's always been a big driver of sales and revenue. And I think back in the early days, it was also very much the Wild West. We didn't have as much visibility into attribution and clickstream and how different channels were interacting throughout that consumer journey. So, you'd have an affiliate that, you would talk to maybe or maybe not, and all of a sudden they're coming out of the gates, driving $10,000, $20,000 a month, and you want to understand how they're generating that traffic and those sales. But on the flip side of that, some people are also, at least at the time, were a little bit afraid to look under the hood and really understand it, because it could be, not as good as they had thought. So it was a good learning experience, I think, when it comes to the compliance aspect of the industry, understanding, how the traffic, how the sales are being originated, making sure that they're, truly incremental and not just kind of robbing Peter to pay Paul situation was really interesting. And I think, one thing I did learn that definitely worked, but also was detrimental in some cases, was paid search. And that having affiliates that were running paid search for brands, and when done well and strategically, it can really be a powerful partnership. But again, early days, Wild West, not having as much visibility, there was a lot of cannibalization and paid search affiliates that were basically kind of overriding the brand ads, which was creating conflicts and issues and almost a turf war in the marketing department.
I mean, the brands, like, if they're doing paid search themselves and then the other people are showing above them, they're basically competing against themselves and then paying out the commission.
Exactly, which is not ideal. So again,
how do you navigate that? You want to encourage people. I mean, they're going to spend their hard-earned money and drive traffic to it. How do you navigate that? If I'm sure some brands maybe don't do as much paid search, so it doesn't really matter. But the ones that are, how do you navigate and encourage people to still run their own campaigns on paid? Or do you tell them not to?
Well, I think I have a mantra: there's no bad partnerships or partners, there's just bad partnerships. So it's really how you structure and kind of architect the partnership and making sure that you're creating that alignment. And using the paid search example, there's different kind of safeguards that you can put in place, such as bid caps, where you won't let, the affiliate won't be able to bid over a certain, price point per click. We've broken that down by geography, so letting affiliates do specific markets, geos, locales, or even by search engine. So they can be in Google, but they can't be on MSN or Bing or some of the other platform search engines. So there's a lot of different ways to do it. And I think what we found to be most successful is to do a very orchestrated and coordinated strategy where you're plugging the gaps or letting the affiliates play in the spaces where maybe the brand is struggling. And, affiliates are only making money when they're converting. And so they tend to be very innovative and creative. And so they tend to adapt and evolve to make it work. And if not, they're not going to keep pouring money into it. So there's definitely a balance, but I've seen some really successful partnerships come out of it. And again, it's there's a lot more tools as well available today to just help manage and have better insight into where these affiliate partners are doing paid search to make sure there's no overlap or cannibalization.
I do want to talk about, you mentioned, because in my mind, I always wanted to ask you about compliance and regulation. So I do want to get into that.
Sure.
And what makes these creators happy as well. But you mentioned some software and tools. What are some things that out there that you think people should look at as far as the tech side goes?
There's on the paid search side, there's tools like Brand Verity, the Search Monitor, that do a great job at just giving brands and marketers insights into who's bidding on their terms. So those are great tools to use on that front. There's other FTC regulations that, disclosures that need to have, affiliates need to have in place, that they're promoting a brand either as a sponsored content piece or that they're earning commission. You've probably seen those disclosures at the top of articles and reviews saying that, hey, when you click through our link, we earn commission, learn more. So there's tools out there that help manage that. We've also leveraged or built some of our own proprietary tools that we use to manage that internally. But that's been, the technology and the tech side of the industry is, come a long way, and there's a lot more tools available for brands and agencies to, truly justify and make sure that the partners that they're working with, are aligned with the overall outcomes and goals that they're looking to achieve together.
Yeah, I'm curious on your side when you're working with someone, and maybe we'll take Tommy John as an example. Maybe not. You'll tell me. But like when
Sure.
you go in, obviously there has to be tracking in place. There has to be payments in place. Are you installing all these things like for the brand, or typically do they come to you and they already have these things in place with the tracking and the payment systems and things like that?
Yeah, sometimes they're already working with an affiliate network or tracking platform. So that's really us just coming in, making sure things are set up correctly and that we have the tightest integration, best integration according to best practices and how we do things. In some cases, we are helping them kind of stand up a new program. So, we're fortunate enough to have really great relationships with a number of affiliate networks and platforms out there, where we can streamline that process for the brand very easily and kind of play the project manager role of just making sure things are moving forward, and things are getting set up correctly. So it's kind of two buckets.
Yep. Let's talk about, I wanted to I'll get into some of those other questions like, compliance regulation, but I know there's different types of affiliate partnerships. I don't know if you want to walk us through some of those, because I know maybe there's a lot of misconceptions out there when people hear the term affiliate and what that is. So what are some of the types? And we can maybe talk through some examples.
Yeah, affiliate is a very broad term, depending on the industry you're working in. But as it relates to our universe, I think a lot of people are familiar with kind of the foundational affiliates, deal sites, loyalty, cashback, content, coupon. Where we really get excited is really on some of these emerging and growth partnerships. That's what we call them, and those tend to be some of the influencers, technology partners, on-site technology partners, strategic B2B partnerships. So really working with another brand to tap into a shared audience or customer segment.
What does that look like typically?
Well, an example would be we worked with a VPN brand very early on in agency, Anchor Free, and we did a cross promotion with Malwarebytes, where basically we did a email exchange where we did some cross promotion of email sends. So that's one example. We can do different brand bundles and things like that collaboratively. At the end of the day, affiliate marketing is really a payment model and a payment method. So it's all performance based and easily trackable and attributable to revenue. And so really it's the sky's the limit in terms of the types of B2B partnerships you can do. The most important thing is that it's relevant to your tapping into the right customer segments and audiences.
Are there certain segments that you're focused in on? I remember, like, to your point, I think that's like the smartest thing someone could do. Like, because I don't remember which product it was, because I buy a lot of protein related products, but I don't remember if it was Magic Spoon, like the cereal, or Three Wishes or something. But I definitely got some marketing material from another like protein chip company. And I'm like, oh, I was interested in it because, I was a customer of his other company. I wasn't like, why are they sending this to me? I was actually interested in those type of products. So I think it's a smart move, and they probably spent a lot of money acquiring those customers, and they could probably make some money back up promoting a similar, type of product. And I'm sure that company is doing the same for them. So it seems like a smart move.
Yeah, we see this a lot in the software space too. I mean, the health and wellness space is super competitive, and everybody's looking for that edge and way to kind of break out of the noise. So there's a lot of collaboration, and especially if you have two different brands that are really kind of helping support a specific goal or health initiative, you can create some really good momentum. But for software on the digital side, free products, using the free version of an app, you may see ads for other brands or merchants. Sometimes those are affiliate links that are being used so they can generate revenue passively through the channel. But it's very low risk. You only pay for the actions and conversions you're looking to drive. So it is surprising that more brands aren't doing it, but we've definitely seen significant growth just with increasing ad spend costs, paid costs going through the roof, having less ability to target through some of the different social media platforms, things of that nature. So it's definitely getting more attention and getting a bigger seat at the marketing table.
Rick, talk about the evolution of your type of client from when you started. What were some of the milestone type clients you work with, and then what type of clients do you work with now?
Yeah, one of our first kind of lighthouse clients was Groupon when they were just launching an affiliate program, and I was introduced to them through a salesperson that I worked with at a startup right out of college, and they were just looking for help of how do we do this? How do we set it up? And so
their whole model is that too. I mean, being in Chicago, I saw when Groupon first was putting out their first few deals. I mean, even their partnerships are affiliate. I mean, they're promoting that their whole model is affiliates essentially. So
yeah, they were kind of a trailblazer into the whole retail media segment too, when they started promoting other brands. And it wasn't necessarily a Groupon because it's kind of separate channels within their business, or at least it was at the time, where they have, their daily deals, local deals that are, kind of brokered specifically through the platform. But then they were also offering other discounts and deals, as basically an affiliate of these other merchants. So yeah, they were one of the first and kind of led the way in that whole retail media space.
What kind of things were you advising them?
We were advising them against it actually initially because of just the leakage of, you have somebody coming to our site through maybe an affiliate link, and then they're going to click through an affiliate link on Groupon and go to a different brand that cuts the affiliate out. So it can make some waves and not the good ones. So, that was kind of our thought at the time, and we started testing it and started to see some decent traction, and it definitely built momentum over time. It wasn't an overnight hit. But I think a lot more, what you see with like Best Buy and Walmart and some of these retailers doing on-site promoting other merchants that, they may not be selling in store, but they get a ton of traffic to their site. They're working on the publisher side as an affiliate, and it's again a nice supplemental revenue stream for the business.
I mean, this is everywhere, right? And I'm not sure. Do you ever maybe work with brands for like credit card companies, but like I, sign up for an American Express credit card, and if you buy this from Dunkin' Donuts, right, you get X amount free through rewards or points or things like that. There's so many of these like type of partnerships.
Yeah, card-linked offers have definitely come in heavy within the industry. The nice thing with the card-linked offer aspect too is, it kind of breaks away from just the e-commerce business too. You can start getting into the retail and brick and mortar. And so, we help brands get set up with Amex, Capital One, Chase, some of the big publishers or card networks. And the beauty there is they have a ton of shopping data where you can do some really targeted campaigns to people that have never bought from a brand, people that haven't bought in 6, 12, 18 months, whatever that may be. You can get really granular. So you can do some really cool things with those card linked offer partnerships.
It's also, I think, high trust, right? If it's like, oh, it's on Amex, then it must be a decent brand, right? Even though I've never heard of it before.
Exactly. Yeah, no, there's definitely that trust and kind of association of being on an Amex, being a merchant on Amex that, you know, creates trust and even for, a consumer that's never bought from a brand before, they'll offer an incentive to kick the tires, try a product. So yeah, it can be a great new customer acquisition partnership.
So Groupon was an early customer, client. What were some of the other types of clients in the evolution?
Some of them aren't even around anymore. We had, software clients that specialized in DVD conversion software. I think I don't own a DVD player anymore, but, we had a lot of different, AV software, internet security. That space has evolved quite a bit. And, I think we started to expand into some more apparel brands, home goods, outdoor, subscription, Home Chef, another great Chicago brand. They were a longtime client and great partner. So yeah,
I
we
saw
just started.
OXO on your site.
Yep,
OXO, they're huge, yeah.
yep. They're a great clients. Love working with their team. And yeah, we just started working with a little bit more household name brands, which is more fun, right? I mean, internet security and software is great. It serves its function, but most people are shopping because, you know, they have an issue. Their computer got hacked or their identity got stolen. Whereas, OXO, Hydro Flask, Ping Golf, all of these brands, this is something that brings people joy, pleasure. It's a passion, and the types of partners that come along with that. They tend to be more enthusiasts. So that's where creators, influencers start to come into play. And yeah, it's been a fun evolution. And we've got a great portfolio of clients and a great team to help support them.
So when people are thinking of the types of affiliate partnerships, maybe talk about Hydro Flask for a second and what you did with them.
Yeah, no, we've done a lot of different partnerships with Hydro Flask. I think one of the things that they've struggled with is just it's a very competitive market. It's very saturated. There's a lot of noise. There's a lot of products that are similar, and so what we did with them was more working with their PR team. So another thing that we've found with the evolution of the industry is just kind of either cross agency collaboration or interdepartmental collaboration between internal marketing teams. Kind of early on, it was either you had a outsourced agency or you did it in house. And with Hydro Flask, we worked with their PR team to build out a strategy and just help them gain more market share through some content placements on Food and Wine and some other publications that drive significant revenue and volume, and also have an incredible return on ad spend. So yeah, it's especially with those saturated markets or commodity type products, having the right partners is almost a competitive differentiation or moat, if you will. People can't easily recreate those partnerships, and for them, for Hydro Flask, it worked really well.
What type of, what you do kind of crosses over different departments in a company? What kind of what departments? I don't know, maybe you start with one, you start working with others, but what departments are you typically working with when you go into a brand?
I would say it's primarily the growth or customer acquisition, e-commerce team. I would say the collaboration tends to happen most with the PR, just because they're working on, they have relationships with some of the mass media companies that we work with. I think the main difference between PR teams and affiliate is PR tends to be more editorial driven, whereas affiliate, we tend to work more with the commerce and partnership teams. Once brands have been vetted or products have been vetted by editorial, we engage with them on a more regular cadence, just have more coverage organically. But I think PR, sometimes we'll work with the paid search team depending on what their paid search strategy is. If there's anything we can do to help support them. And yeah, as long as we don't have to deal with their legal team outside of contract negotiations, it's a good deal.
What about Savory Spice? What did you do with them?
Yeah, Savory Spice was an interesting story. They're a very niche spice company out of Colorado, and we helped get them featured on the Today Show. And they have, again, there's some really big players in the space. And when we started working with them, they hadn't had the best luck working with affiliates historically, and so
Why do you
it took
think
some.
that is?
Um, I don't know exactly. Oftentimes, sometimes if brands just kind of auto-approve affiliates that apply to the program, you don't really know who's working, who's promoting the brand. I don't remember the specific use case there, but if the affiliate program wasn't as productive or effective as it could be, and so we kind of came in and shifted the focus more on quality partnerships versus just quantity, and started getting them featured and building partnerships with some pretty high-end mass media publications, content, and food creators. Their seasonality is a little bit different, especially with the barbecue season in the summer. Typically, that's a slowdown for a lot of
I gotta
e-commerce
get off
brands.
this site because it's making me hungry here. So,
They have some great recipes on there,
God,
and their products are amazing. We got a couple good gift baskets from them.
I'm sure. I'm curious about, is there a formula for percentage of what people should be paying? Because I imagine like some of the software companies have more margin than obviously, a spice or a water bottle or something like that. Is there some kind of formula? They're like, hey, Rick, I have no idea. What should I be paying my affiliates here? Like what percentage?
Yeah, it truly varies. Our approach is we do some competitive benchmarking, seeing what their competitors are paying, and then we're a very numbers driven, metrics driven organization. So at the end of the day, it comes down to making sure we're hitting their ROI and margin goals. And so we can do some, reverse engineering of some math to make sure that the commissions are aligned with their customer acquisition cost goals. And even with that, that may vary by SKU, by product, by vertical category, product category. We can do specific commissions by SKU or product. So it may not be a blended, 10% or 5% across the board. It may be at a SKU level and also pay out differently for a net new or new to file customer versus a returning or existing customer, because those new customers are definitely more valuable, but also retaining customers is incredibly valuable. So it's important to maintain those relationships and compensate partners accordingly.
I'm wondering best practice. I'm sure it depends, but you mentioned net new. Okay, they drive someone, and if someone stumbles across who's already a current client, maybe they'll get paid a certain percentage. Is there best practices on how long? So this person comes back, they buy something, and they come back in like 2 weeks and they buy, $500 worth of spices or something. Does the partner typically get credit for that, or just wanting best practice of time frame, or maybe they only get it on initial sale if they click through? How do you think about those things?
Yeah, that's a great question. We've done a lot of research into click to conversion timelines, and frankly, most transactions do take place within 24, 48 hours. But it's a nice, makes affiliates feel good when they know that, hey, even if they don't buy something day one, 2 weeks, 30 days after, they'll still get credit for that transaction. So I think, it's pretty common to see referral windows between 7 days, 30 days. Once you start getting much beyond that, it gets a little mucky because it starts to, other channels may be involved for retargeting and things of that nature. But I would say most of the programs we manage range from a 7-day window to maybe a 30, 45 day.
So back to types of affiliate partnerships, which ones should we talk about that we haven't hit on that would be interesting for people to think about?
I think we've talked about quite a few. I think the ones that we're really focused on is this year anyway is some of those on-site technology partners. A lot of brands have on-site technology that help with retention, increasing AOV or basket size. And so we look at it as, a company or client will have their own tech stack, and a great way to test and test or plug a gap would be to bring in a technology affiliate to fill that gap. There's a number of partners out there like Upsell It, increasingly RevLifter, that do really good job, either recovering, somebody who abandoned cart or just keeping the consumer engaged on site. But what we found to be most successful or be most effective is when there's a goal or outcome in mind or focusing the partnership based on a specific goal. So, for example, if we want to, target new to file customers, people that have never purchased from the brand before, having those on-site technology partners engage with those consumers only to help just kind of ramp and lean into converting those customers. I think sometimes people get a little bit hesitant with on-site technology partnerships because, one, they may already have something that's working okay or fairly well already, or they don't want to deal with the integration, or there's just a lot of uncertainty around how it could impact conversion or potentially have a downside. And so we like to kind of walk before we run, do some split testing or multivariate testing to just kind of see which if there's affiliate partner that's going to outperform what their existing tech stack is, let's lean into that. Or in some cases, maybe they aren't, they're already doing it better than the partner. So then let's just kind of leave what's in place alone. But I think the technology space is always evolving. AI tools, things of that nature, to help with the consumer engagement. We use it, from a partnership perspective, being able to identify partners that'll help brands show up in the different language learning models. But technology is definitely always in the forefront. But I think the content creator space is just booming. And so that's really where a lot of our clients are looking for help of just, leveraging those relationships that we've built over the years with, top influencers, top creators, and mass media publications.
I mean, I can imagine, Rick, if I'm someone that I'm going to promote a brand and they have a pop-up that has get a percentage off, enter your email, get a percentage off, enter your text. To me, that's attractive because it's like it's capturing their information, so it will, offer them and market to them.
Well, you've probably also had a bad experience with that, where it's very obnoxious and in your face, and so yeah, there. When done well, like anything
I mean, I
else,
guess for
right?
me, if I don't want it, I just like exit out.
Yeah.
Maybe I'm just not. I don't get mad at those things, but it's just my personality. But that stuff doesn't bother me personally.
No,
if it's something I want to get again, I almost want them to retarget me because I'm like,
yes.
oh, I don't have time to buy it now. I hope they retarget me so they follow me around.
And I mean, you're gonna. It's about client education too, right? Or customer education. Something you bought, maybe they have something new coming out, or just learn how to use their product better, more effectively. There's a lot of value there. I think what brands are afraid of is it's going to create kind of a negative experience for the consumer. And obviously, we work with reputable partners, and we have full control over how we integrate and make sure that they're adding value and not kind of rubbing people the wrong way. But
on the types of affiliates, I know before we hit record, we were talking. I don't know how it works as far as like retailer. You mentioned like Ulta and Sephora. How do those type of partnerships work?
Yeah. So, traditionally affiliate has always been very much focused on, companies that have a D2C e-commerce presence. Amazon and Walmart are now opening up their marketplaces, allowing tracking platforms like Levanta to come in and have more visibility and control of how they're working with affiliates that are driving traffic to their marketplace stores. Sephora and Ulta and Best Buy and some of these other retailers, the retail media side of things, so is also kind of along that same vein of Amazon marketplaces, where essentially you can drive traffic to their site, or in some cases these brands are now opening up their affiliate programs, their partnerships for brands that they may sell in store or that they may be testing as a potential in-store product, to kind of invest in and work with the brand to help increase sales and sell more products, but leveraging the brand's affiliate program without having to go and build, the brand having to go and build their own. So it's pretty unique. It's definitely kind of on the tip of the spear of the industry, of the retail media side of it, but it's pretty exciting. I mean, you think about Sephora, Ulta's, these brands are they've been around forever. They have very robust affiliate partnerships, and to be for a product brand to come in and be able to tap into that is a pretty powerful partnership.
At what size does a company have to be to work with someone like you? Is a certain revenue they have to be at, or how does it work?
Yeah, typically our clients are generating somewhere between 10 and 20 million in D2C e-commerce revenue. We've worked with emerging or high growth brands that are, may have some VC funding or whatnot behind them that are on a good growth trajectory. But that tends to be, or has been, kind of our guide on that. There's some other metrics in terms of site traffic. Are they generating 100,000 uniques a month? Things of that nature that can be helpful. But when you start looking at programs that are on Amazon and some of these marketplaces, some of those metrics aren't available, or it's not as easy to decipher. And so we try to really understand what the goals and outcomes are of the brand and look at it of, can we help them or not? And we have the playbooks, we can focus on outcomes and goals, and we tend to be realistic when it comes to building out forecasts and revenue projections of what this affiliate channel or affiliate program can do, because it is an investment and it does take time to build those partnerships, get them onboarded, and get them driving traffic and sales for brands. But it's a mix of short-term kind of lift and also long-term just strategic growth for the business, and kind of fitting into the full suite, the full marketing mix. And again, it's been an evolution, and with the click costs and ad spend being what it is, it's definitely getting more attention and becoming more attractive for brands.
I know with what you do, relationships are kind of the foundational piece. I'm wondering what you've learned in forming amazing and sustainable relationships with two, companies or company and individual.
Yeah. Couple things come to mind. I think, personal connection has always been, important to me, and just getting to know whoever our point of contact is, or the team that we're working with. Business is great, but I think the where I find most value, or I get is most fulfilling for me, is former clients that we may not even be working with, but we're still staying in touch. We're asking how our kids and families are doing, what they're doing for the holidays, things of that nature. That's always been really important, and again, fulfilling from my end. And kind of to your point too, I think, there's a lot of agencies out there, and, sometimes it's hard to differentiate. So having that personal connection or that relationship can really be a big point of differentiation and building trust. And so, there's creative ways. I always, like to find creative gifts and things to share with new clients and just create a positive experience for them, working with us. And, even after the fact, continuing to stay in touch has always been great.
Is there an most interesting gift you sent to someone over the years that sticks out, or that you've received?
We used to send money trees to all of our new clients. So they're like a little bonsai tree. And we stopped after I could not keep one alive for more than like 3 or 6 months. I'm like, and I'm not.
You want to kill the money tree?
Yeah, it's just like a bad omen or something. I don't know.
Just get have someone make a plastic one or something.
Yeah.
You can't kill it.
But now what we've been doing, and this is a new initiative, we've been partnering with another brand, Woodchuck USA in town, and with their Buy One, Plant One initiative. So we've been starting to use this where we'll be planting trees here in Minnesota and globally.
For the ones you killed, you're planting new ones.
Yeah, we're trying to make good here. But I think it's a little bit unique. It's a little bit different. It's making the world a better place, and outside of just the trees to just the habitats. So for the animals and all that good stuff. But yeah, we always try to find unique ways to connect, and this is another example.
I love it, Rick. First of all, thank you. I mean, I love hearing your thoughts, your journey, your evolution, and all about, really the foundational thing is helping two individuals or companies help build better relationships and more customers. So thank you. Everyone can check out iaffiliatemanagement.com to learn more. And we'll see everyone next time. Rick, thanks so much.
Thanks, Jeremy.
Thanks for listening to the Rising Entrepreneurs Podcast. This episode is powered by Rise 25. Please subscribe and check out future episodes.